Welcome to the channel. Today is November 12th, 2024. Today we're going to be talking about is Warren Buffett giving us a warning. Yesterday was Veterans Day. Happy Veterans Day to all those veterans out there. So let's get straight into it. So as always, we're going to start off with the market. The Dow is down 259. The S&P is down 25. The NASDAQ is down 65. This is not a pullback, just so you know. This is just, down. The market's down a little bit. This is certainly not what we're waiting on. One real concern here for me is that the bond yields, the 10-year yield is up to 4.43. We know that the Fed just cut interest rates last week, and the bond market seems to be going in the opposite direction. And how that works is when they cut interest rates, they really only affect short-term interest rates, which is T-bills. And as you know from our videos, we're pretty much loading up on T-bills. That's where we're parking our cash at. So with the Fed lowering interest rates, it does bring down the overall yield. I was able to buy a T-bill today that was about 4.54. So still a decent return and a good place where I like to park my money at. So in this article on Warren Buffett, they talk. It was in Barron's, and they're talking about Warren Buffett building up his cash. One of the things I just wanted to read: Buffett could prove persistent in the long run, even aimed the recent bullishness. Some market analysts believe stocks are pricey, especially when compared with their long-term record. If the stocks plunge, Berkshire has plenty of firepower to pounce on bargains. For investors sitting on big gains, taking some profits as the market hits new highs could be a good strategy. As we knew last week with the Trump election, the stock market went up, a pretty good percentage. So I wouldn't be surprised if Buffett was continuously selling some of his shares. Another thing that I want to read that I kind of disagree with, because you can't time the market. And I don't believe in this instance Buffett is trying to time the market. He's basically, to me, he's saying that stocks are basically overpriced. And this is a good time to take some profits off the table and add to his cash pile. Buffett right now, as of last quarter, the end of last quarter, he had $325 billion in cash. And I believe he had only around $279 billion in stocks, which I believe is pretty significant. That's basically saying that Warren Buffett is over 50% cash in Berkshire Hathaway right now. And so if any opportunities do come up, which I believe is going to come up, he's going to have the opportunity to make some wonderful investments. And I'm actually kind of excited to see what he does. At least for now, Berkshire stock sales appear badly timed. Barron estimates that Buffett has left more than $20 billion on the table with the sales of his Apple this year, given that the stock is now $227, above their estimate of Berkshire's average sale price of $190. I believe Warren Buffett's average purchase price is around 30 or 40, something like that. So he has huge gains. And one of the things that you can't do, and we made a video on how difficult it is to sell, but you can't, it's almost impossible to time the market. You don't know when you reached a peak high in the stock market. I mean, if you could know that, you would be filthy rich. And as you know, about a month ago, I sold all my shares. And it doesn't bother me at all that the stock market has kept going up. I believe we're reaching a point of dangerous levels. This is, in my opinion, and it's just my opinion, I believe this is the most priciest stock market that I've ever seen. I've been doing this for around 30 years. I lived to 2000. I lived through 2008, 2010. And this is what I believe is the most priciest stock market. And as you know, I'm looking forward to when we go into a bearish market. I don't know when this bear market is going to start. I don't know how it's going to happen. I do know that something's going to trigger it. And whatever that some financial incident is going to trigger it. I think it's probably going to come out of Japan. They've been having interest rates too low for too long. They got the carry trade going on, and if they get some more inflation and they have to raise interest rates more, I believe that's where could affect the whole world, because they got so much money out there and people with the carry trade. And I explained the carry trade in great detail. So exactly what I believe Buffett is doing is, and why he's sending, and why I take it as a warning. Buffett been doing this for a very, very long time. Very long time. He was questioned in 2000 when the stock market was bubbling. They said he was outdated. They said all type of things about him, and he got that bear market. When the bear market came, he got that correct. He was sitting on a pile of capital when 2008, 2009 came, and the stock market tanked, and he was there to make, and if you go back and look at a little bit of history, he was able to, give some really good loans to GE, give loans to Bank of America. He basically sold preferred shares, and he got, a really good percentage. I think I want to believe it was around 10%, and he got the right to purchase shares at a set price. I wish I could be that big and I was able to do that. It's easy to win when you're able to do that. When you're able to loan capital to banks, and or to banks or different companies. He loaned money to GE too. And when you loan to companies and you're able to get a 10% dividend yield on your preferred shares and have the right to purchase stock at a certain price, basically what as a call. And he was able to do that over like 5 years, I believe, which gave him the opportunity to purchase those shares, in which he did. He purchased, I don't know if I don't think he did GE, but I know he purchased his Goldman Sachs. He purchased his Bank of America, by the way, which he's starting to sell down now. So I believe he's building up his capital. He's going to wait for the bear market to come, and he's going to make sure that Berkshire Hathaway is in a really good position. And as I said, this is the most inflated market that I ever seen. And we're in many bubbles. I think we're in a housing bubble, we're in a stock bubble, and to my surprise, as you watch the financial news, they're not reporting it that much on CNBC. I even kind of had to stop watching CNBC. But like, let's take the auto industry. The auto industry right now is doing horrendous. Horrendous. When you drive by the car lots, they have cars everywhere. They have a large amount of inventory. And as I explained in one of the videos in the past, what normally happens is your suppliers are going to be affected before it affect the manufacturers of the car. So basically, I mean, if you look and just look on the news, most of the suppliers are really laying off a lot of people. They just closed the plant here in Buffalo. I live in upstate New York. They closed a plant in Buffalo. I believe they manufacture tires, and they laid off pretty much majority of their people, because they said, the market, they're not purchasing any tires. I mean, the auto industry in France is really in jeopardy. Daimler Benz done warned twice of margins coming down. So I believe that's an indicator of just how bad we do. And I done talked about trucking for a very long time now, and just how bad that they're doing. And I believe the next step is going to come to stores, it's going to come to manufacturing, and it's brewing. It's brewing right underneath us. And when these hard times come, and once, we're like on a sugar high, a lot of times because of mainly because of federal debt that they're selling, that we keeping our GDP really high. But when it comes home to roost, I believe, and I'm doing as Buffett is doing, I'm making sure that I'm positioning myself that I have, a lot of capital for when this downturn does come, and I'm able to purchase stocks, at really good prices. So we're going to see what happens. We're going to see when it comes, but I'm going to keep making these videos. I ain't got very many people watching them. I do know that my sons watch them, and this is one way for me to get my message to them, so they can make sure that they prepare themselves for what we had to come. Because one of the things that you don't want to do, or it's hard if you're fully invested and you ride the downturn, more than likely, I believe your stocks are going to come back. But it's really hard, or you're really not taking advantage of the downturn. I like to take on two positions. All my positions that I take them on. I don't never plan on selling. And the only time that I would really sell is when we get in a situation as we're in now. And I done sold some stocks that I really love. I sold Meta, I sold BlackRock, I sold Berkshire Hathaway, because I want to make sure that I'm positioned for the downturn. And I'm very, very comfortable right now, even as the market keeps going up. And they're saying because of the Trump trade, as it keeps going up, only thing I believe that's going to happen is going to make the downturn even worse. And I believe this time it's going to be so bad that a lot of people have come to the stock market in the last couple years, and a lot of them have never felt what a downturn feels like. And some of them people are probably never invest again. It's happened throughout history, all the way back to the tulip mania, and it's going to happen again. So I hope this information was helpful. If it was, please share, please like. I'm just trying to get the warning out to people that this is not a time to be excited and to be purchasing stocks. This is a time to be worried and to be fearful because everything is just so high. But good luck investing. We out.